Hello again, everyone. In this technical analysis of the stock market video, I call it Let's Make a Deal, because that's exactly what Donald Trump is trying to do with China. And the headlines this morning on Bloomberg: Trump revives China talks with tariffs truce and a break for Huawei. So we'll see what happens here. We'll see what kind of risk appetite comes back into the market. We'll see if we want to continue pushing here. And we'll talk about our various scenarios we got for the market. We could have some fireworks the first couple of days of the week. We've got a holiday shortened week coming up. The market is only open a half day on Wednesday and closed on Thursday. All right, so this is the moving average view. This is daily view. You can see what happened here on Friday, up 16.84 on the S&P 500. So we had a 4-day pullback in here, right back to the 10-day moving average. It's my 10-day exponential moving average. This is the 21-day simple, the 55-day simple. So the trend is to the upside right now. We've punched to new highs, new all-time highs the prior week. And it looks like we want to do that and keep pushing higher right now. Let's take a look at the weekly chart. You can see we are actually down 8.7 for the week. It looks like just a little bit of an inside type pause here on the candlestick pattern. I want to take a look at the monthly chart. I've got to go to a slightly different view. Here we go. So here's what happened in May. Look at the big downdraft that we had. We lost 193.77 points in May. And then in June, we came back and got 189.7 back. So you lose 194, you gain 190 back. We're down 4 points over the last 2 months, but it sure looks like this is basically wanting to reverse everything that happened in the month of May. So now what kind of continuation are we going to get? That's the real question. Let's take a look at our Elliott Wave picture. I'm going to pull up the preferred count that we've got. Okay, the preferred scenario I've got is that we are working an expanding triangle here from a intermediate wave 3 high in January of 2018, and that we are working something that looks like this. So when I look at the wave structure and I look at this C wave that we've got, you could see that when I compare C to A, okay, so I compare C to A, that it went over 161.8%, almost to 200% of the length of A, okay, in terms of where it ended down in here. So just as a projection, and I've also done this for time elements in terms of the length of the waves. I'm not going to go into that detail in this video, but I have shared that with my insider members. What I'm looking at is doing the same exact thing in terms of the length for D. So if I look at D and I compare D to B in here, if it duplicates the same kind of ratio that was done between C and A, we would come up here and be just shy of 200% on D. Okay, just shy of 200% of D versus B, and that would put us right around 3090 to 3100. So where did we close on Friday? 29.41.76. You can see that here on the side right there, or you can see it right here, 29.41.76. So we're talking about 150 or so points shy of that potential target if we keep pushing. And right now it looks like that's the deal. Now, where do we go from there? Let's say we push up, we get a high in here, and then we come on down. We're in the next E wave. This is pretty dramatic. We could do the same thing. Now, again, this is a little bit premature in the fact that I'm projecting E and I don't have the real end of D yet. Okay, so that's one caveat I've got. But it's down here, almost to 2,000. Now, the thing I like about that is that when I look at, and actually I need to go to the weekly view is to make this a little bit easier, a little bit clearer. This is the weekly view. The thing I like about that is that puts us down, this E wave, that puts us down into the prior fourth wave of one lower degree. And I like to see that in terms of a pullback. When you're doing the fourth wave pullback, that it pulls down into the previous fourth wave, many times to the end of that fourth wave. But for argument's sake, I'm just kind of using the same kind of percentage projection out that I'm used back over in here. So this 1C is already a done deal, so we know how it compared to A. D is still evolving, and once we get an N to D, then we can make a little more accurate comparisons to E. So that's what we've got going on. Now, this is an expanding triangle, okay? And to me, it doesn't really matter whether you have an expanding triangle or whether, and let me shrink this a little bit, or whether I've got just a regular flat. Because either way, the difference, okay, here's the difference. I have, in the expanding triangle, have intermediate wave 3 ending over here in January 2018. Here, I've got it ending back in September of last year, September in the fall, okay? So whether it ends here, when it ends, back over here, doesn't really matter a whole lot from the standpoint of where we are right now. What are we trying to do? We're trying to complete a counter trend move back up in here, and then one more move to the downside to complete this fourth wave. And again, this pulls back down close to and into the prior fourth wave of 1 lower degree. Okay, so that's the picture. There's always the possibility that we could have a fourth intermediate wave already completed. And let me zoom out. I don't like it nearly as much, mainly because this fourth wave is very shallow when I compare it to the third wave. How much did it retrace of the third wave? It didn't even get to 23.6%. Very, very shallow. It's possible. Right now, these are the scenarios, but I got to say my preferred count that I'm working is this one, and we'll see how it develops and how it evolves. All right, so let's take a look at the high yield bond fund. Okay, here's HYG. It was up 3 cents on Friday, so just a little bit of a pullback in here. Continues to stay pretty much in sync with the market. It's very much signaling risk on, okay? So we got a little bit of a risk off with the market, and then now we're resuming that. Just a little doji candle on Friday. Let's take a look at the weekly view of this, and you can see what it's doing. Kind of the same kind of duplication. When we looked at the S&P on the weekly view, we had a little bit of an inside type of candle in here. Exact same thing that we're getting. You can see, though, we are pushing very much, the prior week. We're pushed above all that April highs, and it's basically saying, yeah, we want to continue to push higher in here. It looks like risk on from a weekly perspective with HYG. So I like to see some kind of, conflict or non-confirmation coming out of HYG in the market when I think a turn is coming. I'm just not seeing it right now. Okay, so that's what makes me think. It's just one of the clues we look at. Let's take a look at the VIX. Here's the VIX on a daily view. You can see what it did on Friday, down 0.74, pretty much, kind of falling out of bed for the week on Friday. You can see Tuesday we had this move. It looked like maybe we were going to get a breakout type move. We just didn't get any follow through. And then we had an inside day, consolidation, a tighter inside day on Thursday, and then we break down. Okay, so let's take a look at the weekly view of this, and let me zoom back out. Actually, why is it not? Let me show a different view. Now, actually, that's fine. Let me just zoom in a little bit. I think the point I wanted to make with this is just that when you look at this candle for the week, it doesn't look like you're like, well, okay, this is not really telling us a whole lot, except for the fact that this is the lowest close of the last 8 weeks. So if you look at 2, 4, 6, 8 weeks of trading, this is the lowest close for the VIX of the last 8 weeks. So it could be that it wants to just, especially the way it ended on Friday, you're just like, okay, is this kind of like throwing in the towel short term? We'll see starting Monday. Okay, that's it for this weekend. If you felt like the video was helpful, give it the thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like to get more of this kind of insight, education, trade ideas, come on, head on over to the membership. Let me pull that up here and head on over to the website, actually, at joehenches.net, and check out the membership and other things that I've got for you over on the website. Again, it is joehenches.net. All right, everyone, have a great weekend, and remember to share the video.